second quarter of 2013 saw an increase in activity primarily because of the first quarter being slower than average. That was due to the massive push at the end of 2012 to get a lot of transactions completed. That being said, many businesses are still continuing to thrive, which is increasing sales and leasing activity, which therefore translates into increased absorption, decreased vacancies, and an increase in asking rental rates as well as asking listing prices for sales. The Southeast submarket is what saw some of the most notable transactions in the second quarter, some of which were the sale of 5300 Corporate Grove, which was 130,000 square feet to a user, the sale of 5300 Patterson, which was 400,000 square feet to an investment group, and the expansion of 4247 Eastern, which is the home to Undercar Products, which was a 110,000 square foot expansion that kicked off in the second quarter of this year. Going forward, we still continue to see throughout the remainder of this year activity increasing and having a bit of a shortage of inventory in the industrial market. Interest rates continue to be a big driver in the fact that sales activity is where it's at, and as so long as they stay low, we expect to see many users that are currently leasing looking to buy.
The second quarter saw steady growth and strong activity. Over the last 18 months, we've seen an increase in rental rates and a slight decrease in vacancy rates. Although it hasn't been dramatic, each quarter has proven to be better than the last. Construction is picking up throughout the area, with the soon-to-be-completed CenterPoint Mall at the corner of 28th Street Southeast in the East Beltline, as well as the Bucktown project in Granville, anchored by Cabela's and Target. Most notably and exciting to us are two new openings in our CBD with Panera Bread and Bagger Dave's. Our nonprofit sector has been active as well, with Goodwill Industries purchasing a former Walgreens at the corner of Michigan and Diamond, as well as Pine Rest Christian Services purchasing 32,000 square feet of the former Michaels store on 28th Street Southeast. Looking forward to the third quarter, we're anticipating that rental rates are going to continue to increase while vacancy rates decrease in our major retail corridors.
For the 10th quarter in a row, the office market in the Greater Grand Rapids has seen a decrease in its vacancy rates. Overall, we've seen a half a point decrease in just the last quarter alone. A lot of that is leading to landlords being more aggressive as they push for higher office rates, rents being asked for in both the suburban and the office market. Within the CBD in particular, we've seen a consolidation of the Class B office buildings. That has led to a very aggressive spike in the asking rates. However, the Class A office space in the CBD is becoming more consolidated, and we are finding it more difficult to find larger floor plates available. The good news with that is that we're seeing, for the first time in almost 10 years, talk of another new building construction within the downtown districts. Currently, there are 5 developers looking at the proposals for new buildings, all of them vying for that one large anchor that gives them the ability to get a shovel in the ground. Within the suburban office market, we've only seen a quarter-point drop, but it is following trend with the CBD in that we're seeing some increased rates. There's an overabundance still of B and C space available, but again, similar to the CBD, we're seeing the Class A office market in the suburban areas have a lack of large floor plates available. Although there are a few, the asking rates are going up, but unlike downtown, we're not seeing a lot of proposals for new construction proposed in the suburban market. Overall, we see the next 6 months as kind of being a tilting point. If the economy continues on the rise as it's been, we're going to see some real positive absorption continue and possibility of new construction overall. But we've got to watch that to see what happens.